video, I'm going to teach you one of the most powerful concepts in trading, that is going to be supply and demand. And if you understand this concept well, you can start identifying where the market is likely to reverse or continue. And today I will try to explain it in the simplest way possible, especially for beginners. What is supply and demand? Supply and demand is a price action concept used by traders to identify areas where buyers or sellers are in control of the market. Demand means buyers are stronger than sellers, so price moves up. Supply means sellers are stronger than buyers, so price moves down. Price moves because of the imbalance between the buying and selling orders in the market. Demand zones is an area where buying pressure is stronger than selling pressure. When price reaches this area, buyers enter the market and price usually moves upwards. It acts like a floor where price tends to bounce up. A supply zone is an area where selling pressure is stronger than buying pressure. When price reaches this area, sellers enter the market and price usually moves downwards. It acts like a ceiling where price tends to drop down. Why supply and demand works? Supply and demand works because large institutions such as banks, huge funds place big orders in these areas. When price returns to these areas, the remaining orders get filled and price reacts again. How to identify supply and demand zones in the market? We mainly focus on three main things. The first thing is strong price movement away from an area, small base or consolidation before the price moves, and a return of price to that zone where it may react again. The types of supply and demand patterns: we have the rally base rally, bullish continuation, then we have the drop base drop, the bearish continuation, then we have also the rally base drop, the bearish reversal, then we have also the drop base rally, the bullish reversal. I'll be showing you those three patterns on a real chart. The difference between supply and support and resistance. Supply and demand usually uses zones, while support and resistance usually uses lines. Supply and demand focuses on institutional orders areas, while support and resistance focuses on historical levels. So many traders say that support and resistance is the same as supply and demand, but they are quite different. Some of the steps I take when I'm taking a buy position or a selling position, I mainly focus on identifying a demand zone, wait for the price return or retest in that zone. I look for a bullish confirmation, then enter a buy with the proper risk management. Then the sell setup, I identify the supply zone, wait for the price retest or return, then look for a proper bullish confirmation. It can be a candlestick or a pattern. Then I enter a sell position with the proper risk management. Then we shall also be talking about risk management, as they say that every strategy needs a proper risk management, a confirmation before entering a trade. It's also the same to supply and demand. You should always use a stop loss, proper risk reward, confirmation before entering a trade. Like in most cases, supply and demand zones can also fail. So if you don't have that proper risk management, you might end up losing all your account. And lastly, if you have found this video helpful, do not forget to share, comment, like and subscribe. Thank you.